Hey everyone, welcome back to Corporate Decoder, where we untangle your favorite company's financial secrets. Today we are diving deep into Optex Systems Holdings' latest annual report. Get ready for some eye-opening numbers and a look behind the curtain of their business. And if you love getting straight answers from these SEC filings, make sure you smash that subscribe button and join the conversation on our Discord server, linked below. This is Optex Systems Holdings' big annual report, a deep dive into how they did over the past year. They're in the business of making optical sighting systems, which basically means sophisticated lenses and scopes, mostly for military use. Think of the equipment soldiers and vehicles use to see and aim. Let's jump right into the money. For the fiscal year ending September 2025, they brought in almost $41.3 million in revenue from customers outside the company. That is a pretty good jump of over $7 million, or about a 21% increase compared to the year before. Breaking that down, their Optex Systems segment in Richardson took in about $23.8 million. This part of the business is booming, up over 30% from the previous year. A big driver here was their periscope sales, which jumped a massive 58%. It looks like they are delivering more of these, which is great for their top line. Their other main segment, the Applied Optics Center in Dallas, brought in just under $17.6 million. This segment saw a smaller but still solid increase of about 11%. While their optical assembly sales were down, their laser filter sales saw a nice boost of almost 30%. Now, revenue is one thing, but profit is another. Their gross profit, which is what is left after they pay for the materials and direct costs to make their products, was about $12 million. That is a nice climb of $2.5 million compared to last year. Their overall gross profit margin, meaning how much profit they make on each dollar of sales before other expenses, improved slightly to about 29%. At the Optex Richardson segment specifically, the gross profit margin improved to around 25.5%. This is a significant improvement, mainly because they are selling more. When you sell more, those fixed costs like factory rent and equipment get spread out, making each sale more profitable. The Applied Optics Center saw its gross profit margin dip a bit to about 32%. This was mainly due to changes in what they sold and some increased costs for warranties on their day window products, especially with that glass cracking issue they mentioned. When we look at their general and administrative expenses, which are costs like salaries for office staff, rent for corporate offices and its systems, these went up slightly to about $4.9 million. The company also noted that the Applied Optics Center absorbed some of these costs from the Optex Richardson segment. Putting it all together, their operating income, which is the profit from their core business operations, was about $7.1 million. That's a strong jump of over $2 million from the previous year. After accounting for other incomes and expenses, their income before taxes was about $6.3 million. This is also a healthy increase. However, they did have an asset impairment of about $800,000 related to their speed tracker product line. This means they wrote down the value of that asset because it was not performing as expected. And for the bottom line, their net income for the year was about $5.1 million. This is a solid improvement from the previous year's $3.7 million. Looking ahead, their backlog, which represents the value of unfulfilled customer orders, was around $39 million. This is a bit lower than last year, down about 11%. For their Optex Richardson segment, the backlog decreased, especially in periscopes, partly due to delays in certain government contracts. The good news is that a good chunk of this backlog, about $29.7 million, is expected to be delivered in 2026. This suggests they have a decent revenue stream lined up for the next year. Now, no company report is complete without a look at the risks. Optex Systems Holdings faces quite a few. A big one is their reliance on government contracts. Budget issues, delays in funding, and fixed price contracts where costs can go up unexpectedly are all major concerns. They also mentioned significant supply chain disruptions, especially for materials like aluminum and steel, compounded by labor shortages. About 83% of their material is single-sourced, meaning they depend on just one supplier for a lot of key parts. If one of those suppliers has issues, it can really hurt Optex, potentially causing production delays and higher costs. On the stock market side, their stock often trades in low volumes. This can make it hard for investors to buy or sell shares easily and can lead to bigger price swings. They are also considered a smaller reporting company, which means they have fewer disclosure requirements, and this might make some investors hesitant. There have been some interesting leadership changes too. Danny Sconing is stepping down as Chief Executive Officer in December 2025, and Chad George, who is already their president, will be taking over as CEO. This sounds like a planned transition, but it is always a moment to watch for any company. Looking at their balance sheet as of September 2025, they had about $6.4 million in cash. This is a nice increase from the prior year. They also have a $3 million revolving credit line with Texas Capital Bank, although they had no outstanding balance on it as of September 2025. This gives them some financial flexibility. Their overall financial picture seems to be improving. Revenues are up, profits are up, and they are managing their costs reasonably well. The improvements in operating income and net income are particularly encouraging. So, what is our take on Optex Systems Holdings? On the positive side, they are showing solid revenue growth driven by strong performance in their Optex Richardson segment, especially with periscope sales. Their gross profit margins are also improving, showing they are becoming more efficient. They seem to be navigating supply chain challenges with some success, and leadership changes appear to be handled smoothly. However, the reliance on government contracts and single-source suppliers remains a significant risk. Any hiccup in defense spending or a disruption with a key supplier could hit them hard. The low trading volume of their stock is also something investors should be aware of. Overall, Optex Systems Holdings is showing signs of much-needed improvement and growth. They are winning contracts and increasing sales, which is positive. But they need to keep a close eye on managing their supply relationships and diversifying their customer base where possible to mitigate those inherent risks in their industry. Alright, that is our breakdown of Optex Systems Holdings' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comment. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.